Hi everyone, my name is Rodrigo Mandeville. I'm an investment advisor with Mandeville Private Client. I'm also a financial security advisor with Zagari Simpson and Associates. I have the Chartered Financial Analyst designation. I'm also a CFA charter holder. And today I just want to talk about one of the most common mistake, the very common mistake that I see out there is just investing with regret. Many people, what I see is that sometimes they invest looking at just the prices, and I mean they see an investment going up in value a lot, and they invest. They regret not having, I mean, not investing before when that investment was at a lower price, expecting the same returns going forward, and and sometimes, I mean, it's very likely that the same returns are not going to repeat in the future, and that's something that I see very often. And I mean, unfortunately, that the price of public investments, like the typical stock, bond, out there, depend a lot on the forces of supply and demand and the emotions of the day. And in investing with regret, people jumping in the market just because they see things going up, and because a lot of people sometimes they feel that they miss the returns and in the very good returns in the past. That's sometimes that's what drive the prices sometimes very high, in my opinion. And I can just give you an example. For example, I mean, I had an acquaintance, someone that I knew that a few years ago, at the time the marijuana stocks were doing very well, and this person told me that he had invested in a particular stock that was very popular, a marijuana stock in that industry. I mean, the marijuana industry was very popular. That's what I mean. And he told me that he had invested in that he invested in he had purchased that investment because he saw a lot of his friends making a lot of money with that investment when the prices were down. And I mean, obviously these people invested before that, and that he expected to get the same returns going forward. And sometimes it's just very unlikely, and it can happen in any kind of investment. I mean, sometimes they're very good quality investments that become very popular, but the prices they become very popular that the prices just go up to a point that the prices don't justify the quality. And the worst is when it's a really bad investment, not so when it happens to uh, in a not so great investment. And I mean, this is something that I see, and I mean, and if I can give you just an example, a lot of the cryptocurrencies right now, I mean, a lot of their valuations reflect their popularity, just how popular they are. They go up so much in value, and then they just go down. I mean, they up and down, up and down, up and down, and their values depend on how popular they are. And it's also unfortunate that many people, many investors don't have access to private investments. I mean, investments that usually the very sophisticated, very wealthy, and very successful investors use in their portfolios, and the investments that their valuations are a reflect. I mean, they're a reflection of their true fundamentals. They are not affected so much by the force of supply and demand and the emotions of the day. And there is a misconception that only the very wealthy, sophisticated investor has access to these kind of investments. And yeah, I mean, that is not the case. I mean, sometimes the same investments can be investors can have access to the same investments that these very wealthy, sophisticated investors have in their portfolios, and it's just because perhaps their financial institution don't have access to this kind of investments. This is why they are not they don't have access to those kind of investments. And obviously there are many I mean, like just in the like in the public markets, their quality. I mean, they are some very good, and they are not. I mean, they are not very good. I mean, I'm talking about their quality, and just like in the public markets, it's something just to watch out. I mean, there can be some very good private investments and not so great ones. And so this is it. I just wanted to share this with you. I mean, this is something that I see very often. I mean, it happens to me. We're all emotional creatures. I mean, and I see sometimes as I see investments they went up in value a lot, and I just think, oh my God, I wish I had invested in that investment before. And but it's just the problem is just going ahead and investing and invest in an investment, expecting the same returns going forward, just because we regret not not having that investment before, and I'm pretty sure many of you are doing very well, and but I just wanted to provide you some value and something to watch out. And this is it. So I want to wish you all the best. Okay, bye.